Hello and welcome back to Strategic Investor Radio on OC Talk Radio. We're grateful you've joined us today, and we're talking here about the 4th annual Liquid Alternative Strategy Summit to be held on May 1st in New York City. And we're speaking with one of the speakers at the conference, Paul Heathwood, Director of Investor Relations at Boston Partners. Paul, welcome to Strategic Investor Radio.
Thank you for having me.
So, Paul, tell us what you'll be speaking about at the conference.
We will be speaking about the Boston Partners Emerging Markets Long-Short Strategy. This is a mechanism to allow investors to access the interesting growth and investment opportunities in the emerging markets, but to do so with less volatility. We launched the strategy a few years ago because we believe our investment approach is tailor-made for the emerging markets, and you have a lot of inefficiencies and ability for active management to outperform in those marketplaces.
So speaking at the conference about that emerging market one, there are not many emerging market long-short strategies. Why have you guys launched this recently?
We have managed long-short portfolios both domestically and internationally for many years, and the emerging markets was one area in the marketplace that we have really not tapped into, even though it offers such attractive prospects for active managers. So we felt that there was a very good opportunity for an active manager to add value in this segment of the marketplace. The reason why there are so few of them out there, as you accurately point out, is that it is a difficult task to do in terms of being able to get short exposure on individual securities within many of these emerging markets, where in many cases it's just very hard to do operationally, or in some cases it's very difficult to do because countries don't allow you to do it by law. So there are ways that you can gain that exposure, which we have developed, that allows you to get short exposure and create that second driver of return, so a second source of value add in the portfolio, in addition to a long portfolio that we think can outperform over time. And the really important part is when you put those two together, you can pursue a similar return pattern, but really improving your risk pattern as well by protecting on the downside.
You know, Paul, this conference is going to be all about alternative strategies. And alternative strategies can kind of be viewed as the third rail of investing. There's the typical 60-40 split investment, which is fixed income or typically bonds, equities, and now alternatives. Why do you think investors need that third rail of alternative investments?
Well, investors need alternatives because, in our view, they improve the overall performance of the total portfolio. The reason why they're called alternatives is because they really present a differentiated risk profile and an improved risk profile if they're done correctly. Meaning if your portfolio can add value both by going long and by going short, then one should be able to match the long-term returns of, in our case, as a long-short manager of the equity markets, but to do so with much less risk. And that certainly hasn't been as important in the last several years because people are so focused on the markets which have been going up, but we get reminded when markets go down, these strategies can really kick in. And there's many ways to win in the equity markets. One way is to win by not losing, and long-short equity portfolios certainly help you do that.
I'm going to quote you all week here. One of the ways to win is to win by not losing. That's a great point here. So you are Director of Investor Relations. Who invests in your strategy and why, Paul?
So we have several types of investors. Historically, many financial intermediaries, so wealth management firms, bank trust departments, private banks, registered investment advisors use our long-short portfolios as components within their much larger asset allocations. One of the interesting things we've learned as we've been out talking about our EM long-short portfolio is that many investors don't invest in emerging markets because of the volatility. We think that this strategy could be very interesting to investors who want EM exposure but are looking to do so with less volatility. And I think that really applies to both individuals, their advisors, as well as institutions. And we're beginning to have a number of conversations with larger institutional investors who are very interested in the strategy and see this as a differentiated way to try to get exposure to emerging markets.
So, Paul, for those who would like to know more, give us the website.
www.boston-partners.com.
Okay, and those who would like to know more can on the fourth annual Liquid Alternative Strategy Summit can go to jveventsgroup.com. That's the letter J, the letter V is in Victor, eventsgroup.com for more information on the conference. Paul, thank you very much for joining us today, and we wish you and in your presentation and for the entire conference a great success.
Thank you for having me.
Again, we've been talking with Paul Heathwood, Director of Investor Relations at Boston Partners. You're listening to Strategic Investor Radio and OC Talk Radio. I'm Charlie Wright, and we'll be right back.